Hello all and welcome back. I hope you're all doing really well. Some more bullish news for HBAR and Hedera today in general, and I will also be covering the news on Fantom that was released earlier today, as the currency or the crypto itself seems to be absolutely capitulating following on from the news released by its founders. First things first, if we look at the crypto bubbles for the weekly performance, we can see Fantom is rapidly approaching a 20% decline on the week, currently at 18%. I wonder if it will hit 20% by the close today, Sunday. Hedera in general isn't doing too badly, actually. It's sort of tracking sideways again. It's coming out of the wedge that it's sort of fallen into. Again, I've said it before and I'll say it again. I am just continuing to average into this position. I believe that we're going to see a large explosion soon in the ecosystem itself, with some projects like SaucerSwap going live with DEXs, and also some news on HEDERA Starter that I'll be covering today. As soon as these open up and the smart contracts are finalized, as well as staking coming online in Q2, which we're right around the corner from, the ecosystem growth and sort of ability for DeFi to sort of take over and develop the project further is going to be enormous. So we're right around the corner. If you guys have been holding on for a while now, you should all be very excited to see this start to unfold at quite a pace. Once DeFi opens up, we can start seeing total value locked become a metric on Hedera, as well as more adoption of the project in the sort of retailer space anyway. Flicking over, we'll cover this Fantom news first, because it's been quite a bad day for Fantom in general. One of the things that we can also see immediately is over on Fantom's Twitter accounts of the Fantom Foundation, they're already going into damage control mode to push out some tweets to try and explain what's happening. They've turned around and said, we're extremely grateful to Andre for all he did for crypto as a whole. However, Fantom isn't and never will be a one-man team. There are 40 plus people working at Fantom. The teams working on consensus and more recently middleware have been doing so for years, and the team continues to grow. He was a big picture guy. We are working closely with the CEO, Michael Kong, laying the groundwork, especially during the tough times of 2018. Therefore, the development of Fantom won't be impacted by Andre's decision. Okay, so maybe the development won't be impacted. However, the project has been harmed substantially alongside the rest of the ecosystem. If you guys haven't heard the news this morning, the news being that Anton, Neil, and Andre have decided that we are closing a chapter of contributing to the DeFi and crypto space. There are around 25 apps and services that we are terminating on the 3rd of April 2022. So for some reason, instead of them just deciding to leave the space and hand over the reins to these projects that effectively are part of the Fantom ecosystem, they are deciding to terminate those apps, which seems very suspicious to me in general. They also note here, most notably, they're going to be terminating Yearn Finance, Keeper, Multi-Chain, Chainlist, Solidity Exchange, and Bribe. Unlike previous building in DeFi sucks rage quits, this is not a knee-jerk reaction to the hate received from releasing a project, but a decision that has been coming for a while now. Thank you to everyone that has supported us over the past few years. Whether or not it's a knee-jerk reaction, it does seem to be a knee-jerk reaction that they are deciding to close 25 apps and services that they have contributed to over the last couple of years and that add to the DeFi space. Very, very strange, but also goes to show how important it is that you don't just have one poster child of a project, that the project has a lot of credence and a big sort of wider reaching prospect. And that's kind of what Hedera is, right? So we've got this massive governing council that's backed by some of the biggest companies across the globe. There are tons of different use cases outside of the crypto space. We talk about these use cases because Hedera is bridging between crypto and the real world. A lot of these other projects don't seem to be doing this. They're too focused and wrapped up in the DeFi space and appealing to people that are interested in making money fast. They're not actually developing projects which are going to serve and create a better world. You know, this is the criticisms that we hear from established investors over in the equity markets, is that you can't invest into these crypto projects because they're not really doing anything. They've got some cool technology, but there's no use cases. That's where Hedera is different. If we look over as well, there's this tweet that I came across from Forecaster talking about the total value locks. That's what TVL is. So total value lock declines in layer 1 and DeFi protocol since Andre Cronje has resigned March 1st to March 6th or today. Fantom chain nearly 12 billion down to 8.2 billion. 30% decline in the total value locked. Solid 2.2 billion down to 990 million, 55% decline in the total value locked. YFI 3.55 billion down to 3 billion, 13%, and Keeper 602 million down to 582 million, 3% decline. In fact, the Fantom chain declines actually larger than this. I'll flick over in a minute. But we can see these screenshots over from DeFi Llama, and we can see that people are just pulling the plug on the investments they currently have locked over in the Fantom ecosystem as everyone rushes to exit. If I flick over and we actually look at DeFi Llama directly, we can actually see that the total value locked on the 3rd of March was 12.09 billion, and it's now down at 8.2, which is actually roughly a 35% decrease in the total value locked, as everyone is voting with their feet and looking for the exit. Talking about this as well, if I actually flick over to a tweet that I just published not too long ago, in response to one of my infographics that I pushed out talking about the average network fees in US dollar across these layer ones, I noted at the end of the tweet that Hedera's network fee is also fully fixed. It will not change, unlike the rest. And adding credence to that previous comment about why fixed fees on networks are crucially important, as Fantom is dumping due to the news and the transaction fees are skyrocketing due to the volume of those trying to exit the ecosystem. Fantom currently has a $1.93 transaction fee. So their transaction fees have spiked to nearly $2 per transaction because of the unprecedented congestion the network is seeing due to people trying to leave. This just goes to show how you can't just take the word of the project. They claim that their fees are, say, $0.00001. It's a load of nonsense in reality because they are not fixed. And as soon as the network sees a spike in demand that was not accounted for, the fees absolutely skyrocket. This is exactly what had happened with Ethereum, and that's why the gas fees on Ethereum are over $25 a transaction. That is one of the key powers of Hedera. It is cheap, but not only that, it is consistent. And that's why it's such a powerful project in this space. If I flick over to Hedera Starter, so we're moving away from the Fantom news now, some big news from Hedera Starter actually, so I'm going to play this for you guys. Drop that on mute. So what we can see here is them effectively touting what appears to be a DEX. So obviously we've got SaucerSwap working on DEXs, but it also appears that Hedera Starter is going to have a DEX very shortly. I think we all kind of knew that this was an outcome of the project anyway, as they need a DEX to facilitate the Launchpad platform that they're also going to be rolling out. So really bullish news, and this could actually be one of the first big adoption DEXs that we see over on Hedera. Again, I've spoken about this absolutely loads, but this is all for Hedera ecosystem adoption. This will continue to see the expansion roll out, and it also opens the door for total value locked over on Hedera. Really, really bullish stuff. The last thing I wanted to cover in this video was another use case for Hedera, and that is Avery Dennison's ATMA.io, a connected product cloud by Avery Dennison. So Avery Dennison are a very big company based in the apparel, food and beverages, beauty, retail, logistics and pharmaceutical industry. The overview being they wanted a connected product cloud, building a foundation for trusted, sustainable relationships between every item, every company and every person. The challenge is to push the industry forward. ATMA.io considered multiple ways to prove the better the integrity of the products and their supply chain provenance. The solution was ATMA.io provides support for sending product lifecycle events such as creation, shipping and sale to Hedera, recording these events with the Hedera consensus service, establishing an immutable and verifiable history for every product. So again, this is effectively another supply chain use case. I've covered several of these sort of supply chain use cases, and I'm still firmly believing that one of the first major adoptions of Hedera will be in this supply chain industry because it affects every single industry. What we can see here is they've already got 5,000 global factory participants, 50 new items added per second, 10 billion items connected to the cloud. So for how this could potentially work is if you think of a manufacturer, let's just say Nike, it could be that their raw material comes in from a supplier, that gets logged, that then goes into stage 1 of the production lifecycle where they're, say, gluing the shoes together. That gets logged as well, so you can see, okay, 3 days in, that was built. After that, we can then see it goes through the design stage where they add all the leather bonding and the laces, etc. That's it. And then the final stage being where it gets packaged up. That all then gets logged in this immutable chain, and you can see that the product is completely verifiable from source to the finished product effectively, and then out to retail as well, where you'd go, say, purchase it from a Nike shopfront. So the idea being that ATMA.io is flexible and agile, built on the shoulders of giants, benefiting from Avery Dennison's Fortune 500 global footprint, innovation and expertise, combined with a deep knowledge of material sciences, radio frequency identification or RFID, and digital ID technologies. Avery Dennison is now able to provide a smart one-stop shop connecting the physical and digital worlds through a suite of technologies and labeling products to unlock the power of data for end-to-end visibility. Absolutely amazing stuff. ATMA.io is an open API-based platform consisting of modules to authenticate devices and products, manage inventory, and trace products throughout their lifecycle. ATMA.io provides a set of developer modules to authenticate devices or products, manage their inventory, and trace them throughout their lifecycle. To enhance the ATMA.io platform, the Avery Dennison team wanted to leverage a public ledger to provide greater assurance and product tracking. By adding Hedera as an optional and additional configuration to the ATMA.io stack, the digital identity becomes forever immutable, locked within the Hashgraph chain. Public ledgers offer a new way to record transactions that are genuinely immutable and tamper-proof by design. By recording events to a ledger, any party can transparently understand and trust the provenance of information, and implementation that benefits from this immutable provenance are tracking the authenticity of a product. So not only tracking the authenticity, but also tracking the raw materials that went into it. This is really good for green and sort of better world practices for these businesses anyway. Flicking over to ATMA.io's website as well, we can see that this is quite a modern use case. There's lots of information over here that I will leave linked in the description. If you guys enjoyed this video, please drop a like, leave a comment, interact with me. I enjoy reading all of your guys' comments. Anyway, guys, I'll catch you on the next one. Cheers.